Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the market. Let's kick things off by having a look at today's economic calendar.
Today's economic calendar brings us an exciting event. Get ready for the release of the highly anticipated U.S. Non-Farm Employment Change Report, also known as NFP. Analysts expect this report to reveal the addition of 189,000 new jobs in May, compared to 253,000 in April. Should the report align with expectations, it could potentially impact the mighty dollar, leading to a decline, while commodities like gold and oil might experience a significant increase. Make sure to stay tuned until the end, as we'll also share our technical analysis for foreign currencies, indices, and commodities.
Let's move on by having a look at what's making headlines within the financial markets today.
In currency news, the dollar faced its largest daily loss in nearly a month. Weak U.S. manufacturing data and comments from Federal Reserve officials reinforced market expectations of the Fed, likely refraining from an interest rate hike at its upcoming meeting. On the other hand, the euro rebounded from a two-month low following European Central Bank President Christine Lagarde's statement that further policy tightening was necessary. Now let's shift our attention to what's making headlines on Wall Street. The S&P 500 advanced, driven in part by the U.S. House passing a debt ceiling bill, a crucial step to avoid a U.S. default. The broader market index secured a 0.4% gain, while the Nasdaq rose by 0.5%. The Dow Jones Industrial Average traded near flat after a 4% loss in Salesforce following its earnings report limited the gains. Meanwhile, the number of Americans officially filing new claims for unemployment benefits saw a modest increase. In addition, ADP numbers indicated that private payrolls in May surpassed economists' estimates, coming in at 278,000 compared to the predicted 167,000. Shifting our focus to commodities, oil prices experienced a notable increase, marking the most significant gain in 2 weeks ahead of the OPEC Plus meeting scheduled for Sunday. The passage of a bill by the House of Representatives to suspend the U.S. debt ceiling helped offset the impact of rising inventories in the country. After 2 consecutive sessions of losses, oil prices rebounded as the bill was passed, enhancing the chances of averting a default. The legislation will now move to the Senate. Lastly, let's discuss gold. The yellow metal rallied, driven by renewed expectations that the Federal Reserve will maintain interest rates during the June meeting, particularly due to weak labor and manufacturing data. A weaker outlook for the dollar prompted some flows into gold, leading to a recovery from over 2-month lows. However, caution set in ahead of the non-farm payrolls data for May, resulting in some consolidation in the gold market. Now it's time to dive into our technical analysis for the day. First, let's examine the analysis for Euro-AUD, followed by the Nasdaq 100, and finally, crude oil and gold. Starting with Euro-AUD, this currency pair is currently trading just above the primary support. If we observe a break below the support with a close below 1.62, it could signal a continuation of the decline, potentially leading to a target of 1.605. Shifting our attention to the Nasdaq 100 analysis, the U.S. tech market broke through the resistance yesterday. Should we witness a close above 14,520, it could trigger a fresh rally, with a potential target of 14,800. Now let's focus on crude oil analysis for today. WTI rallied as expected and is currently trading just above the 100 EMA. If we see a close above 71, it could potentially ignite a rally with a target of 73.4. Lastly, let's analyze gold. The yellow metal is currently forming a double top formation on the 1-hour time frame. If we witness a close below the neckline at 1,975.5, it could lead to a correction back down to 1960.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the peace be with you. Cheers.